Hello there, traders. Welcome to today's live stream. My name is John, Senior Market Analyst here at 𝖢𝖥𝖣yiy. I'm going to be taking you through the all-important charts for today. We're going to take a look at some key markets. We're going to take a look at that fundamental data in the market as well. We're going to have a little look at some key charts to watch. But who have we got in? We've got 𝖾Tunji. Good afternoon to you, sir. Hello to you as well, Deadly Zorro. Is there time remaining? I don't know what you mean by that, but we've just started. We're going to be running for about 45 minutes to an hour, just going through some of the key charts to watch. Welcome, Innocent, as well, and hello to you, Rye Guy. Hope you are all doing well. As always, guys, let me know what you've been up to. Let me know any kind of markets that you've been interested in. Last week wasn't the best performing week for me, although I say that I ended up walking away with minus 0.95%, something like that, which, yeah, isn't great. You know, it was a losing week for me last week. Tried to jump in on a couple of moves a little bit too early, and I'll go talk you through those moves as well, because a couple of them were quite interesting. I was trying to buy silver a little bit early. I did buy into pound US dollar as well, which was actually doing pretty well. I was up quite a bit, but it couldn't break through the 127 level. It pulled back, it took me out, and then I look at it today and it's broken right through that 127 level. So just got into a couple of moves a little bit early, but we can go over that. But minimize that risk to the downside, ended up taking out the trades fairly early, so minimize that risk as much as possible. Hello to you, Just Nothing, as well. I'm doing really well, thank you. Right, let's get into it. First, I want to kind of bring up something as well a little bit later. I posted a community post over on Instagram, and the question was, have you ever blown a trading account, and sort of comment what lessons you learned from that. So I'd love to get your feedback from that. There are a couple of answers on there already that I can see, so I might read a couple of those out just to kind of get you guys having a little think about, risk involved with trading, and we'll talk about that in a little bit. But let's get into it then. Let's get to the first part of our trading analysis, where we like to look at sort of the fundamental picture within the market. So we've had some decent data already. This is the US dollar data. Let me just go to all here, and we're going to go to this week. So I think the main things that came out from the start of this week was really the sort of fallout between Prime Minister Zelensky and Donald Trump, right? End of Friday, that was probably the big news that came out of it all. There was a little bit of a blow up. Zelensky didn't even end up doing the sort of press conference at the end. He left, and there was quite a bit of sort of political risk coming in from that. That has kind of settled down a little bit. I expected the market to kind of be jittery on the open on Sunday, but that didn't quite follow through as aggressively as I thought it would. In fact, we only saw euro dollar was the one that gapped over the weekend, really. But it's interesting to see how that dynamic's going to continue to play out going forward. But we also had Donald Trump over the weekend as well, saying that the 25% tariffs on Canada and Mexico were going to be applied. That was today, the 4th of March. So we will see. Well, they have been applied overnight. There's also been an additional 10% tariff on Chinese goods as well. So we'll see how that one kind of impacts the markets, because on Friday we saw an extension of the downside of the US stock markets as well. So we'll see how this kind of plays into the US stock markets. Right, I'm trading S&P 500 to the downside, from 5849, aiming for 5742. Also short pound yen from 188.70. They sound like good trades. I haven't looked at pound yen this week so far, because I've been more of a buyer of the pound than anything. But yeah, I haven't looked at pound yen, so we can take a look at that in a little bit. Trading the US stock market to the downside makes a little bit of sense to me right now. It's just whether that has sort of real legs to go, and I'll cover that when we go take a look at the charts as well. But in terms of data this week, yesterday we had the ISM manufacturing PMI numbers. They came in lower, 50.3. We were expected 50.6. So we've seen again a downside when it comes to US numbers here. We also had final manufacturing PMIs coming a little bit higher, but the ISM manufacturing PMI is a bit more forward looking, and that came in lower, 50.3. Overnight then, so we had retail sales month on month in Australia coming at 0.3%, so no big upside surprises, but quite a decent move higher from minus 0.1. So Australia seen the benefit from that as well, but I don't really like the idea of buying Australian dollars right now. I think the Australian dollar is a currency that is going to be impacted still by the trade tariff narrative. Wednesday, big data coming out. We've got President Donald Trump talking, making speeches. Pretty sure he is actually sitting in front of Congress. I'm not 100% sure on that. Let's have a look at that. Yeah, so due to deliver an address, joint session at Congress at the Capitol building. So he will be sitting and talking to Congress, I guess, about some of the decisions that have been made, and X, Y, and Z. We have Oz GDP. I think the ones that I really want to be looking at for this week is ECB. Okay, ECB looking to cut interest rates there as well by 25 basis points. So we should see a little bit of a move lower there, potentially for the euro. One that I did want to look at was Swiss CPI, but I haven't actually seen that on here. Where is that? Here we go, Swiss CPI. This is going to be one to watch out for. And you might be thinking, why the hell do I want to look at Swiss CPI? Well, the reason being is because the Swiss National Bank want to try and support their economy. So what they've been doing is cutting interest rates to prevent deflation, essentially, which is what has been happening. Basically, the costs of goods and services have been coming in lower, which basically means there's a lack of demand in the Swiss economy, right? And you can see that it's actually expected to grow to 0.5%. This is important because I think if we were to see another round of deflation, so like another minus 0.1%, the Swiss National Bank would probably cut rates again, and they are very close to negative interest rates right now. And they have said in the past they are willing to do that. So I think if we saw Swiss CPI coming in lower, basically meaning that demand has not been created by the lower interest rates, then I feel that Swiss could still kind of sell off a little bit. Okay, but this is an important one for me because I have been very bearish Swiss yen over the past couple of weeks, or well, since the start of the year, basically. So I'm waiting to see if we're going to get further downside of that move. But yeah, we have an ECB rate decision, might be largely overshadowed by this trade tariff narrative that's going on at the minute. We have just seen the EU committee come out and give an £800 billion stimulus, especially in regards to defence in Europe. So it's quite a big stimulus package there. We've also seen the new German Chancellor Merz come out and say things like they're looking to bypass certain laws to basically say that they can add further stimulus into the German economy as well. So there's quite a lot of things there to potentially support the euro coming up. So we'll go take a look at the chart there. But most importantly, non-farm payroll data coming up at the end of the week. That's going to be very important. But I'll chat to you about that on Thursday in the live stream. So let's get into some numbers. Just make sure I zoom in a little bit here. I've had some more comments. Tony, pound Kiwi was a good trade for me last week. Nice. I did like the idea of buying pound, but yeah, I haven't managed to. Like I said, I traded pound US dollar, which wasn't the best for me. Good afternoon, Vincent. I'm doing really well, mate. Hope you are too. So, what is the currency strength meter telling us this week? really simply, it's telling us to be buyer of the pound, even though it's coming into this reversal zone now. That basically means that the pound is a strong currency right now. Other factors, we've got a bearish Australian dollar, bearish New Zealand dollar, bullish. He says bullish US dollar, but honestly, I'm kind of ignoring anything to do with the US dollar right now. I just think it's a market that's going to float around a little bit. CAD has also come in a little bit lower, but now that those tariffs have been kind of implemented, we're starting to see a little bit of a pullback in that CAD weakness. Swiss stronger, yen stronger. So really speaking, I want to try and buy pound. I want to try and buy yen. I want to try and do that against Aussie and Kiwi. Really speaking, euro also performed pretty well, so I don't mind being a buy of the euro either when it comes to this move. Just if Trump's main goal is to cut US government spending, then that'll bring down the price of gold, right? Not necessarily. Yes, a reduction in government spending is technically restrictive, right? But you've got to look at all these other policies that he's looking to do as well. Like he's trying to bring down inflation by producing more oil. OPEC is backing that right now. So they are increasing production, which could drive oil prices lower. That's going to put more money in the Americans' pockets, right? So it's kind of cancelling each other out. This is what I feel like Trump's doing at the moment, is cancelling each other out. So yes, he's trying to cut government spending, but he's also essentially giving incentives to people as well. So there's been a lot of talk of him reducing taxes and X, Y, and Z. And if he goes through and sort of reduces taxes as well as reduce that government spending, but also bring inflation down at the same time, meaning that the Fed will cut rates, more people still have money in their pockets. And I feel like if the consumer has money in their pockets, they're likely to invest. That's sort of the American way anyway. A lot of Americans invest into financial markets, whereas that's not typical of other countries. It's like in the UK, we're more property based. In China, they're more property based. I don't have much exposure to the US markets and things like that, or markets in general. So I think what's important for gold prices, let's have a little talk about this, because gold is a really interesting one, because I've actually seen it rebound recently. And I've I tried to potentially be a buyer of the rebound here. Didn't manage to get involved, but I did get involved in silver instead. Let me just take a little bit off here. I think the gold market is going to really depend on what happens to US stocks. And the reason for that is you actually see a fairly decent correlation between the stock market and gold prices. Usually when we see a sort of downside, or at least a significant downside move sorry guys, let me just try and pin this. Just make these regular. You can see they kind of move in very similar ways. When we start to see sort of the US stock market give back a little bit, gold prices can kind of fall after the fact. And a lot to do with that is, sort of repositioning, because if you're investing, you're probably investing in multiple things. A lot of companies, a lot of central banks will be buying into gold, things like that. If we start to see US stock markets decline to a significant point, then we usually see sell-offs in gold. The reason being is, the way I like to kind of interpret it is that they are cashing in on that investment, right, to cover for the losses somewhere else, right? There's a really good example of this. If we go take a look back in 2022, right? There's this whole talk of that gold is a hedge for inflation and and yes, it is to an extent. But as inflation was moving higher in 2022, and then we had the narrative that the Fed were going to hike interest rates, the US stock market declined. Well, guess what? So did gold, right? Gold went the exact same way with it, which is kind of counterintuitive to what you would have expected at the time, because you would have been told that gold is a great hedge for inflation. So you would not really expect that move, but they are highly correlated. And again, the way I kind of put this, the point across is they cash in on that sort of gold. We do then usually see gold outperform the stock markets after a period like this, and you can see that that has been the case. Another sort of kind of scenario as well was 2020. You know, when we had the COVID sort of crash, gold also went down, not to the extent of what stocks did, but it still went down as well before recovering along the stock market. Obviously, if we go all the way back to sort of market crashes in general, you can have a look at things like 2008, where the stock market crashed, so did gold prices. Gold obviously recovered well from that. There was a bit of a dynamic in the middle here where we didn't get that between sort of 2012 and 2016. Stock markets did well, gold underperformed, but that was probably because we were under some kind of different conditions. But if we look at the correlation at the moment, still fairly a strong one. So I think if we still see sort of stock markets punching in higher, I think gold will go with it. I think if we start to see significant breaks to the downside in stocks, and we see sort of that recession fear coming through and things like that, I actually think gold will go with it for that moment. So yeah, I'm going to be looking at, and that kind of feeds into your US government spending situation as well, because if the US aren't going to spend money on private contracts or reduce spending on private contracts for companies and things like that, then companies' profits could be in danger as well, couldn't they? So yeah, there's a lot of factors going involved with gold at the moment, because you've got also a lot of BRICS central banks hoarding gold. Basically, every time we see a dip, they're buying some more gold as well. But I think gold prices are more likely to stay elevated. I still feel that we are going to hit that sort of $3,000 level, and that's why I'm kind of interested in being a buyer of gold still. I did quite like this area down through here. We just go to a 4-hour chart. There's kind of this sort of spike lower on the 4-hour, where we had this kind of buying coming in. So I was quite interested in being a buyer around this point, but I missed it, because that was obviously Friday close. Gold then gapped open on Sunday, came in and just basically took off. And I didn't get into anything there. However, silver is a highly correlated asset when it comes to gold, right? If I actually bring up, let's just go over here a second, and let's go on to Forex correlations. Okay, let's just use this one here, and if we go down to silver here, look at the top, one of the top correlations, 94.7% correlation with gold at the moment. So gold and silver kind of going in hand in hand there. So yeah, I like the idea of potentially sort of buying silver in anticipation that gold's going to go up towards that sort of $3,000 mark. And if we look at silver's price action at the moment, we've broken through this kind of downward trend that we were seeing in the market. Let me just plot this properly for you. So when I look at the sort of the highs and whatnot, we've gone from making those lower highs, and we now made a new recent higher high here. So I think for me, yeah, I'm kind of looking at gold and thinking I want to try and be a buy to that $3,000 level, but there's going to be sort of other markets that are correlated that I feel are better opportunities, one being silver at this current moment in time. So looking for that potential push up towards $34 there. At the moment, I did try and buy silver last week, admittedly, and I got stopped out. Basically, I bought, let me get my risk reward tool up. So you see this nice little sort of bullish candlestick here on the hourly chart. I ended up buying there and putting my stop loss below the swing low, and I was trying to target back up to the highs. honestly, for me, that trade is probably a little bit more of a risky trade than I usually take. We didn't really get any kind of significant change in structure there. It's not a typical move I would have took, but you know, I was a bit distracted last week. I didn't actually make very good trading decisions last week, but that was my trade, and I ended up getting kind of stopped out by this, you know. So that was one of my trades last week that didn't work out. But you know, back in it now, back in towards this level here. Stop losses below the swing lows. Looking to see if I can try and target back up to 34, because I think the fundamental's still there for me to want to buy this. I just want to, you know, see if we can get that kind of accelerated move up in line with that kind of gold price as well. So just looking to see if we can push up towards those $34 levels. Hi Bongo, doing well, mate. You're at work, but you're chatting away. I like it. Hope work's going well today. Welcome, Eddie, as well. 5% tariff on Canada and Mexico. Got any ideas how to turn profit from this? What do you think? Mexico. Got any ideas how to? There's a couple of obvious. I suppose the obvious idea, right, is to go take a look at the likes of sort of dollar CAD, right, and say to yourself, well, this is obviously going to impact the Canadian dollar and the Mexican peso, right? If you look at dollar MEX right now, that's up, but you don't necessarily want to buy dollar MEX because of the overnight swap charges on this, right? It's not really a market that you necessarily want to buy. So you want to be looking at things that are impacted by sort of a weakening Canadian dollar or a weakening Mexican peso. Okay, that's where I would be looking at trying to maybe map out some things to this. The problem we've got is Canada have come out with retaliatory tariffs of their own. So is this just going to be a big trade war that's just cancelling each other out, right? An interesting one, though, is that he's only tariffed Canada's energy by 10%. So we know, obviously, crude oil is a big market to look at when it comes to looking at Canada. I mean, well, you want to be looking, looking at oil, sorry. I don't know what I was going to say then. But essentially, you know, this has been, ever since kind of Trump came in and said, you know, drill, baby, drill, you know, this was when he was announced, or that he'd kind of won the presidency, which was on the 6th, was it? Was it the 8th of November? Somewhere around here, I can't remember precisely. I think it was the 6th, wasn't it? I think it was the 6th when he came in. And we had this kind of shoot up in oil because there was a big anticipation that Trump is pro-oil, right? But then he makes a speech basically saying, which was around here, basically saying, drill, baby, drill. We want to, produce more oil. Basically, then putting pressure on OPEC to follow through and increase production as well. And gold and oil prices have dropped ever since. Now, usually that is also kind of negative dollar CAD. So yeah, there's a lot of dynamics with the trade tariffs, to be honest. I think if you're going to look at, you need to look at what products or what goods are being tariffed, what in specifically is, and then you can kind of make a decision. So when it comes to like Mexico, if we go to let's go, no, it's not Ford, is it? General Motors. So when we look at General Motors is down today. Now, I'm saying this because basically General Motors ended up building plants to build cars in Mexico rather than in the US, and they did this for tax benefits. Now, what Trump is obviously doing, and he has taxed automobiles coming in from Mexico, and he's doing this so that General Motors pack up shop in Mexico, come back into the US. So I think if you're trying to look at sort of trades around tariffs, you probably need to be more focused on the equity side of things rather than necessarily the Forex side, in my opinion. I think you'll probably try and find better value in doing that, because it's going to be very difficult to pick it from an FX point of view, in my opinion. Does that mean you're bearish dollar since you are bullish XAU, XAG? Yes, I am bearish US dollar. There's a number of factors for me that means I'm bearish US dollar. Number one, if we're going to take a quick look at, so I know I told you guys before, I'm trying to build out sort of like an economic or macro sort of indicator. Well, I've started it. I've made a very small dent in it. So if I go over to my fundamental tracker here, what I'm basically trying to do with this information is pick out the most important sort of economic data points out of each economy, and they differ, right? Some of them differ, you know, especially when it comes to, you know, countries that import a lot, or you know, countries that export a lot, essentially. So they can differ, but basically I've got some of the main indicators here for the US. Let me just zoom in a little bit, because on stream it doesn't look like you can see much. So what I'm doing is I'm tracking what each metric is. So let's say non-farm payrolls, what the actual is, what the forecast was suggesting, and what the change has been previously. Now, what I need to do to kind of go on top of this now is do a strength and weakness metric on this as well. So what I'm thinking in my head, and I'm kind of thinking this out loud to you right now, fresh, because this is something that I'm building on my own in the background, is coming up with a scoring system. So, you know, obviously with my strength meter, right, I have a scoring system. Put that back there. I have a scoring system, right, which is this. So I look at the currencies and I give them a scoring system. How am I going to score the fundamental trackers, right? So I'm thinking about looking at sort of a point in the direction. Like if it comes out as forecasted, it gets 1 point, right? But if it comes at, so let's say, I'm trying to think of a key here. And guys, I'm thinking out loud, so it might come out a little bit crazy right now. But what I'm thinking essentially is, if we have conditions, right? So the conditions that I'm thinking about are as follows. So let's say beats forecasts and beats previous. And when I say beat, I mean in a positive outlook. I think that will score 2 points. Okay, so if it beats forecast, beats previous, it gets 2 points. I think if we beat forecasts and sort of, let's say, stays the same, okay, we, you know, so fairly positive because it's beaten the expectations, but stayed the same because you can have that. Then maybe we could look at something like a +1, right? So it gets +1. If all the same, so as in was previously the same, come out as expectations, no change, I think that's going to score a 0, and so on and so forth. So this is what I'm kind of thinking. So if misses or misses forecasts and misses previous, I'm going to say that as lower. I'm going to give that a -2 score. Now, I don't know if this will even work. I'm just kind of thinking about this out loud right now. Misses, forecasts, and we'll do the same as like stays the same. I'm going to have to think of another metric though, because it could be forecasts. But come in lower, right? So forecast stays the same. We'll give that a -1. So you've kind of got that kind of sort of, move that, I don't like the fact that that's there. Oops, I don't want to do that. So yeah, I'm trying to think of some kind of metric of how I can work that out, and then obviously I need to back test it to see if that metric actually works, and then forward test it, and then go through the whole process. So yeah, you're saying that the US is weak. I think it is, because if we look at, I've kind of color coded it for now, but you can see non-farm payrolls missed expectations, right? So the expectations were 169, that came out as 143. That's a difference of minus 26,000, right? So that comes into this one. So it beat forecasts, or it's kind of missed forecasts to the downside, but stayed the same because the previous was 143. Okay, so that would be like a -1 score on the metric, you know, in my head right now. The unemployment rate was previously 4, was forecasted at 4.1, came out as 4. So beat expectations, stayed the same. So that would be a +1, right? Initial jobless claims was 220 previously, okay, which is good. Forecasted at 222, which is bad. Came in as initial jobless claims as 242 actual. That's double bad. So that could be -2, right? Because you don't want to see initial jobless claims going higher, essentially. JOLTS job openings was 8.16 previously, forecasted at 8. So forecasted to go lower, came in even lower than that. So again, -2, right? GDP growth, this is the only sort of double positive that we've got. So that's kind of cancelling out one of those as a +2, because it beat previous, but also beat forecasts as well. Retail sales was 0.7, was forecasted to be -0.2, came out. So that, you know, beat or missed on that side. Same with manufacturing, PMIs. Okay, was 54. It's meant to be 54.2. So again, -2. Core PCE was 0.2. So that actually came in better, but stayed the same, right? Not stayed the same, sorry. Came in as forecasted. So I feel like that's a +1, right? Because it came in just as it wasn't shocking. There was nothing shocking about it. CPI, I'd say that's negative. So I'm going to be -2 there. And I need to fill in the rest. But you get my gist. Like, I'm trying to give it then like a scoring system. But just for now, you can see that there's a lot of red on the board rather than green on the board at the moment. So, and I'm trying to do this for every economy with regards to its important sort of metrics. So we'll see what the outcome of that is. But yes, do you mean that I'm bearish US dollar? I am, because some of the key metrics that I feel would be negative for US dollar is bearish from a fundamental picture. So yes, I am bearish US dollar. You can code that with AI and make it easy on yourself. Right, guy, if you can help me do that, reach out to me. I would be more than happy to chat about this with everybody and see if somebody could do that, because I wouldn't even know where to start on that. I know markets. I know about AI. Do I use AI? Not very often. So feel free to try and reach out to me. You can reach me on LinkedIn if you want to chat about it, or Twitter. I'm actually on Twitter. I just never go on it because it's a horrible place to be. Right, so let's go take a look at some charts as well. If we also look at, I also need to kind of put into the element of it like strength and weakness, because although the US dollar was a strong currency in terms of, you know, being stronger than most of the G7 last week, I just don't feel like it's got the fundamentals there to really drive it up. I think it was bullish last week because of the trade tariff narrative essentially within the market. If we go take a look at hedge funds as well, their net change on the US dollar was negative as well. You know, they basically increased short positions, decreased long positions. That's why we've got a minus 1,036 figure here when it comes to the hedge funds, right? So I don't really want to be buying US dollars right now. I don't think that's a good market to buy. And you can see that this week we are starting to see that kind of sell-off coming in. Euro dollar in particular was pushing higher, pound dollar pushing higher as well. You know, this was, I'll show you my trade that I did on pound US dollar last week as well. I did like pound dollar longs, and I went long on the break of this structure here. So basically what I did was got long after that break there, stop loss in below the low here, and my target was up towards this 127.50 handle, because that is the, I'm going to the weekly chart and zoom in. Sorry, I know this is being a bit chaotic at the minute. If you look at these kind of opens and closes here, right, that's where I felt the market would come and retest. So that's where I wanted to try and target with my trade last week, right, in and around this area there. And it didn't play out. So I got my sort of fact that the market came into support. I was looking at the fact that the market was making lower lows and lower highs, right? And then we broke that trend. So we closed above all these highs here. So that's a trigger for me. That's a trigger to get involved. So I got involved, and my real concern was this 127 level. And in theory, looking back, you know, I probably should have, as we hit 127, I should have just closed out the position, or at least just moved my stop to break even, close out half. But I didn't. I was fairly confident that price was going to go towards 27.35, 27.50. And yeah, that didn't work out for me. Now, admittedly, I then tried to buy here, but because we had this kind of head and shoulders and a break, the market had already kind of taken off by like 8 pips or so, and I was being really petty. I basically put a buy limit order like this, and yeah, missed out on a 2-to-1 trade because I was willing to give up 8 pips for an entry. So slap on the wrist, bad trading last week. And even the start of this week, it's not been particularly great because I missed out on that sort of bullish move there on pound US dollar. But yeah, you know, I like pound upside. Do I like it against the dollar right now? No, because we're at this resistance now. Don't really want to try and trade it beyond that. But I do like pound elsewhere. You know, you've got pound Aussie, for instance. This is looking pretty good now with the move up towards these kind of 2020 highs. I'm pretty sure, Vincent, you actually asked me about pound Aussie a couple of weeks ago, and I said I don't like it. I think it was down here at the time, because I was looking at I basically married myself to the bias that the UK GDP growth was going to be lower, and it came out better. And since then, pound has been pretty bullish. And it was this area here. I said, if I was going to be a buyer, you know, that would have been a good level to buy from because of the technicals on it. But, you know, didn't do that. So I hope you did get involved with that, Vincent. I hope you weren't put off by any kind of the comments I said, because that market has gone pretty nice to the upside now. Same with pound Kiwi, pound CAD I liked a lot as well. I just feel like, how do I trade that move successfully, right? So I need a pullback. I need some kind of pullback, and then I'll get involved with pound pairs. Again, as long as the sort of the data still allows me to do it. Yeah, you wait for a pound Aussie before taking it a move. Yeah, was it? Right, I got used on about pound yen, right? Yeah, so let's have a look at pound yen. So that's starting to move nicely to the downside. Kind of propped up into that 190, didn't we? Before I moved down. I really, really want to be a buyer of the Japanese yen, and I'm so gutted that Kiwi yen got stopped out a couple of weeks ago, because that trade would have been absolutely phenomenal. So I got in short here, and I got stopped out on spread when I put my stop loss just above that swing high instead of leaving it ATR as I usually do. Had a few bad trades this start of this year, a few good ones though. But look at that beautiful move to the downside. That was all based off of fundamentals as well in the market, and we've had these really nice downside moves. I'm just trying to now wait for a pullback. I want to see a pullback before looking for continuation moves now. Same with the likes of, Swiss yen. We're kind of consolidating at these lows. Aussie yen, I want to be a seller of now that we've broken down through this zone, because although the Australian economy is actually pretty robust right now, it's pretty sticky, the market's just selling Australian dollars. So might as well go with it, I guess. Kiwi, I also like the idea of being a seller of Kiwi as well, especially against the Swiss franc, especially against the... Look, I like the idea of buying Swiss a while ago, selling Swiss franc a while ago when we kind of started to breach into this zone. But I only wanted to be a buyer if we could have traded above this 51.75 level. And it never got there in the end. It never did it. So it just showed me that there was a lack of buying intent above these highs. And since then, market has continued to kind of drop off. So I think we had a lot of commitment of trader report signals at the time. But since then, those have really faded away. They've really faded away. Took a trade on pound Oz from that level. I got 1 to 3. Awesome. 1 to 3 is awesome. 1 to 3 is awesome. I think in hindsight, we could all do it. You look what I just said on Kiwi yen. In hindsight, I would have left my ATR stop in place and I would have been laughing. I would have been 4 to 1 up on that move. Sometimes it's hard. It's hard to kind of leave those trades on, or in my sake, I just moved my stop a little bit too early, and I got taken out. NAS decline over the past 2 weeks. It's just a temporary downward trend. I would think so. I would think so. Well, we're gonna know. We're gonna know soon enough whether we are going to see breaks. I think I'm looking at this weekly chart right now, and I'm thinking this could get tasty. Right now, there's a couple of different things. I think one thing that you could look at is sort of interest rate expectations. Now, if I look at the 2-year yields, they're actually coming in a lot lower. So at the moment, we're trading at 3.88%. Now, that's lower than last week at 3.98%. That's where we closed last week at 3.98%. So when I look at yields, the bond market is pricing in the chance that the Fed are going to cut rates. However, when you look across the sort of CME Fed watch tool, that didn't show that, right? If I actually go to the CME group, let me just have a little look. It has changed a little bit. So it was up into the 95%. See, last week it was at 96%. Sorry, I'm just showing you something that you can't even see there. It was at 96% of a chance of a hold in the March meeting. That has now been reduced to 89%. So I would have thought that would have been fairly positive for stock markets. But that's not being felt at the moment. The trade tariff narrative is really driving US stocks lower. And I mean, look at this weekly chart. This would be a lovely area to see stocks rebound. But I think if we get below these kind of key lows in here, then I think we're probably going to see something a bit deeper, maybe back into the 53s, which would be quite a considerable sort of pullback. I know hedge funds have kind of been pulling out of the Mag 7s, which is kind of helping fuel this kind of downward move at the moment. The Russell's being really battered at the minute. It's just a weird dynamic at the moment, because I would have said that a lower US dollar and expectations of a rate cut, obviously they're not as good as what they could be, but 2-year yields coming in lower, I think that would really start pointing to me towards a positive stock market. But that's not being felt at the minute. Maybe these tariffs and the retaliatory tariffs the tariff news is just putting some downside pressure on at the moment. I mean, look, you can see that. Think about risk as well. Look at the VIX at the moment. It's up at 24.43. Now, typically, I would say anything below 20, right? Let me just put this little marker on here. Anything below 20 is pretty positive for stock markets. Anything above 20 is fairly negative stock markets. And that's what we're seeing at the moment, right? We're above 20 on the volatility index. So, you know, if we look at sort of 2022 as a whole, 2022 was above 20, and you know that stock market decline was a big one, right? It got below it, stock market started to rally. We then had that kind of blip where we saw that kind of huge move to the downside, and now look, we're starting to press back higher. So volatility, from a volatility perspective, the market is going a bit more sort of fearful right now. That's why you're seeing a stronger Japanese yen. It's why you're seeing markets flow out of risk assets like Aussie and Kiwi. The biggest risk asset of all, Bitcoin, is also just done an absolute 360, right? So this was an announcement of a crypto reserve from Donald Trump, right? Fairly positive news if you're a crypto investor. We've pretty much erased all those gains now, which is absolutely wild. And that just shows you the element of risk and risk off in the moment. I think Bitcoin, cryptos in general, I think they are the ultimate sort of risk asset. And when the market is feeling a bit scared, you're not really going to go put your money into an asset like Bitcoin, are you? That's why probably gold has started to perform a little bit better. Silver started to have a little bit of a rebound, you know, in the short term. But yeah, I think, you know, we've got to be a little bit careful with stocks. Let's have a look at, let me see if I can get up a seasonal. I don't know if I'll be able to get up a seasonal chart right now. But yeah, I don't know if seasonally this is a bad time for stocks. Usually it's not necessarily a bad start to the year after a presidential election. But yeah, this is looking fairly bad, isn't it, right now? Dow's broken through 43.25. So the Dow could be coming down to the 4200s. Which, yeah, that is very significant. But I think it's hard to tell whether this is going to be temporary or whether it's going to rebound. I think for now, a lot of pointers when it comes to the American consumer is quite concerning. You know, retail sales coming in lower, being a big factor there. So until the retailer gets confidence again, then profit margins could be impacted. So, you know, I wouldn't be surprised if we saw a little bit more downside to the stock markets. Especially, you know, keep an eye on your VIX. If the VIX is climbing higher, big no-no, big sign there. Then we're going to see some big changes. One market I really like the idea of selling last week was oil. And I missed my trade here as well. Again, not great start for the week for me. I saw this pullback last week, and basically on Friday when I saw this close, I was like, yes, on Monday I'm going to go sell this. And then I didn't. You know, Friday came, Monday came, and I didn't do anything. I would have basically tried to have sold this sort of break here, down in towards this $67 level. Yeah, but no, it didn't happen for me, unfortunately. I didn't get involved. I missed out on another little bit of a move there, but I really like oil downside at the minute. I like it past 67. You have to wait and see, but this is another big level. If you think you see, you know, a risk asset like oil dropping, stocks dropping as well, you know, if we do see that continuation and stocks breaking lower, then oil prices could go even further. So this area here is going to be a very big level of interest for oil prices right now. So yeah, we'll wait and see how that plays out. Right, guys, we've been going for about 50 minutes now. I'm probably going to end it there because there's not much else to discuss. You know, keep your eye on your stock markets, oil prices, gold, silver, quite like. Volatility index is spiking, so I'd be keeping a big eye on that one at the moment. I don't like the idea of buying the dollar at the minute. Dollar yen as well, starting to break that 149. If we can get below 149, I think it's quite interesting to see this move because I think the yen will get stronger on this. So I'm going to leave it there, guys. I have a video coming out tomorrow discussing the Japanese yen in a bit more detail. So hopefully you enjoy that one. So yeah, if you did like the stream, leave it a thumbs up, subscribe if you are new to the channel. I really appreciate you coming and stopping by and asking questions. And yeah, I will speak to you soon. Please go and answer that poll that I put out on the YouTube page. We'll discuss that on Thursday. So thank you guys, appreciate you all, and I'll speak to you soon. Cheers.